What's up guys, it's Blake here with Trade Tracer. In this video, we are going to talk about what's been going on with the stock market, what to expect from coronavirus. Are we in a bear market? What should you do with your money? All right, so let's go ahead and get into it. We've got the market pulled up here on a monthly time frame. And I wanna start on the monthly simply because it gives you a nice idea as to what's happening in the bigger trend. So as you guys can see here, we have this nice uptrend line that's dated back from the lows in 2009. So this trend line has held as support for the past 11 years, okay? So that's really what we're looking at. Now the thing that I'm noticing here is we do have a DMI bearish crossover. Now the DMI is a directional movement index. It tells you who's in control, the buyers or the sellers. Now on a monthly time frame, unfortunately the sellers are in charge. The sellers are in control. Now we had this nasty monthly February candle, made new all-time highs, and then just sold off on some coronavirus news. And we did close below that 10-period moving average. Now you guys know that anytime we start to break below the 10 SMA on whatever time frame, I start to get a little more cautious. Now currently we are still below that 10 SMA for the month of March, but we haven't closed below last month's low. And last month's low on the SPY was 285.54. Now, if that happens, we would be in a downtrend on a monthly time frame, and I would be very, very cautious about preserving capital, because if we look back in time, you can see, well, back in, let's see. So back in 1998, we did have a nasty red candle, but we never closed below it, so we never entered into a downtrend. Another nasty red candle in 99, never closed below that, no downtrend. When we hit the downtrend was in October of 2000. Now this downtrend started in a nice ugly bear market, and you can see the same thing happened again back in 2000, late 2007, early 2008. Gave you a little bit of a warning signal before we had the famous 2008 housing market bubble. So that is really what I'm looking at. We did have this same setup here back in October of 2018, and that wound up rallying after Trump got elected. And same thing here. We have a nasty candle, February candle, but we're gonna have to see how this month plays out in order to really give us an idea as to what direction is the market going. Do I need to be more in equity? Should I be more in bonds and gold? As you guys know, right now we are about 70% of our portfolio is in gold, and that's for a good reason, right? On the monthly time frame, sellers are in control. Now if we go to the weekly doesn't look very good either. You guys can see a gap down this previous week, and then it looked like we wanted to make an attempt to this 10 SMA, and it just kind of got sold. And you can see lots of volume coming in, and now you can see also the sellers are back in control in the weekly time frame. So we got the monthly and the weekly time frame, sellers are in control. Now what about the daily time frame? All right, you guys know this is what we trade off of, is the daily time frame. It looked like we wanted to have some sort of dead cat bounce when we came back and went through the 200-day moving average. I'm not gonna pull it up because I got the 10 SMA, but the 200-day moving average is right around this 304 mark right in here. So you can see pierced below it and then started to make an attempt at the 10 SMA and got rejected. Got rejected at the 10 SMA, and you can see bears are still in control in the daily time frame. But there's hope, all right? And let me show you why I say there's hope. Now, if we go to the shorter time frames, the 4 hour is one of my favorite time frames for like quick swing trades. So maybe the course of a week, 2 weeks. And the reason that I like the 4 hour chart is because it gives you a little bit of an early indicator as to what the new trend is going to be. So you can see we do have the bears that are still in control, sellers are still in control, but we do have this nice uptick in volume. So these two candles were Friday. We do have this nice uptick in volume, and you can see the selling pressure isn't as great as it used to be. So we had this high selling pressure back here, and selling pressure kind of tailed off when we gapped below, but we're still kind of hanging out at the same prices. So that is a little bit of divergence, and I tweeted that out. I didn't tweet it out, I put it in our Telegram group that I'm noticing some bullish divergence. Now, what is bullish divergence? Bullish divergence is simply when price, or it could go either way, when price makes new highs or continues to ascend, but the momentum is declining. And so the opposite is true. So when price is declining and momentum is increasing, that's bullish divergence. It's kind of like, if I was to give you an analogy, it's kind of like when you go outside and you kink the hose, right? You kink the hose on, you're gonna water the grass. You kink the hose, you have it kinked, but you flip on that water spout and you can feel that pressure inside that hose is building and building and building. So it's like that pressure is getting tense, building that pressure, and then eventually that pressure is gonna be released as soon as you unkink that hose. That's kind of what's happening right now, okay? So we do have this bullish divergence, this pressure is building, but we don't have any rules to trade yet, okay? So be patient. I keep telling you, patience is key. You will be rewarded if you have patience. Now, I'm going to be watching this hourly chart Monday and Tuesday to see what's really happening in the overall market. If we can start to close above some key levels right around the 302, 303 area, that would be a positive sign on an hourly chart. By no means is it telling me that the trend is now changing back to the upside. For that, we need to look at a daily chart. So I keep talking about uptrend. You're gonna be rewarded if you wait for uptrend. Uptrend, guys, is simply, and I've made a video about it, my rules to trade. I highly suggest you check it out. But uptrend is simply one day closing above the 10 SMA, and then another day closing above that candle's high that broke above the 10 SMA. And ideally with the MACD bullish crossover, I don't have the MACD pulled up here. I like to flip-flop between the DMI and the MACD. MACD is more of a momentum indicator, and DMI is more of a trend indicator. So that's all I have for you guys today. Before we get out of here, I want to talk about gold and bonds. So gold is still acting very strong. That's why the majority of our investment portfolio is in gold, and bonds continue to make new highs. So that's where the safe money is right now, is gold and bonds. But once we do hit this uptrend, there's going to be a lot of money to be made in this uptrend. So preserve your capital. Capital is king right now. Preserve your buying power. Once we hit this uptrend, we're gonna hit it hard, and we'll see how the market turns out for us. So I hope you guys enjoyed this video. This is really all I have for you today. Please leave a thumbs up, like it, and if you haven't yet, make sure you go ahead and check out tradetracer.io. It's a premium monthly service that I offer to exclusive members only, and we've been doing extremely well. So thank you guys for watching, and I'll see you again soon.